Good morning, good afternoon, or good evening, depending on the time zone, I guess. This is going to be a short series of me explaining the trading DOM and how I look at it. And it's going to be a short series of 5 to 6 or maybe 8 parts, or depending on how much there is to explain. But I will explain the basics, the order flow, the support and resistance levels, how you can spot them, the spoofing, icebergs, and volume imbalances, absorption, and there is also going to be a video or two where I explain how I look at it and how I scope of these levels. But yeah, let's just jump right into it. So the trading DOM. The DOM stands for depth of market. And I think most traders, they start with a basic candlestick view and they have their time frames, and that is perfectly fine. Eventually, traders, they will evolve and they will look at the footprint charts, and eventually from footprint charts, they will look at the TPO charts, and from TPO charts, eventually the trading DOM. Well, at least that is my transition to the trading DOM that I'm explaining here. So the trading DOM actually shows you all the resting limit orders, and you have the bids. Those are the buyers who are looking to step into the market, and the ask, and those are the sellers who want to sell on the market. And as you can see, I'm using Sierra chart and nothing too fancy. Well, that's all because I just want to have a basic view with numbers. And of course, then here you can also see the buying and selling pressure as well. But over here you can see 600, but this is a market buy order. This is something separate. From Sierra chart, I have package 12 where you also can see MBO data. And MBO data is very handy, I gotta say, because it gives you another layer on top of the market depth that you already have over here. So what will happen on the trading DOM? You look at it and day in, day out, and what I would recommend is you look at it during the London Open and during the New York Open, if those are the time zones you trade in, and just see how the trading DOM reacts to certain price levels. So over here you can see there is some interest at the 77 level, 77.5 level to be exact. So what can happen is the price will go down and it can bounce from here. Then what I would do is I would not trade it. I would just look at it and write down, okay, I saw that there was interest at 77.5 and this was the reaction. And then day in, day out, I will just journal and write down, hey, what am I seeing? What are the price reactions over here? Same goes over here. So now it's a bank holiday, so the market is very slow and not as volatile as we want. But during a New York Open, what I would expect during a normal market day is the price will come up to this level over here, and here we see 600. So it could be an absorption trade. Then what can happen is that the price will go up, or wait, let me just do this so I can explain it a little bit better. Yes, I'm opening Paint. It's that time of day again where I'm gonna use Paint, but I like Paint. So what will happen is the market will go up and then it will stall out for 1 or 2 hours. So basically during the New York lunch, the price will just consolidate over here. And I would call that absorption. So what will happen is eventually you can see a lot of sell pressure just stacking up here. And what it tells me is, oh, this is an absorption and rejection trade, and we are going to nuke down. So that can happen. Or what we can also see is, hey, we are getting a lot of like over here, we have bid and ask, what I explained in the beginning. And then we will see a lot of bid pressure coming up over here. And this is growing and growing and growing. And then I know from, okay, I will also join the trading and with a long order. And then I can scalp a couple of longs over here when it eventually breaks out. So those are some things I'm looking at. And again, this is just a first video of a long series of other videos. And yeah, I think that is the basics, and that is the first thing you would do if you want to be a DOM trader or DOM scalper. So the homework would be to just go in for a full week and just journal the first 30 minutes of the day of the New York Open and the London Open, and just write down what you see. You see interest at a certain level, just, okay, write it down and see if there is a reaction there, and see what it does. And eventually you will spot patterns. Then you will see also at certain times of days, you will also spot patterns. So we will have the Europe close, and we always see a certain reaction over there. The thing that I notice, depending on the trend of the market, is that we will always see a reversal during the Europe close. So that's what I've been noticing with my journaling. That's been very consistent. But yeah, for now, I would say thank you for watching. Give this a try for 1 week and see if you can also spot any patterns. And for next week, I will be talking about how to spot support and resistance levels in greater detail.